Hey everyone, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm just going to do a quick overview of my portfolio for the 6th week of 2025. Right, if you guys are new to the channel, I took an $80,000 HELOC loan against a rental property I own, threw that money in a Robinhood, borrowed against it using margin and investing in that high income ETFs, and this is where the project is currently at. So right now, my account is at $95,438. and 83 cents. Yeah, and the reason why I like to show my account is because I want to be very transparent in everything I'm doing in this portfolio. I'm going to show you all of my gains, all of my losses, and everything in between. Right, so that's kind of just my thought process behind it. So for the last day, account's doing well, but let's take a look at the last week, right? Because we're trying to track the progress of this project going higher or lower. So last week, the account was at $91,236, and currently it's at $95,438. Definitely an upward trend. However, let's take a look at the month period and if it's actually working. So over the month period, my account was at, about a month ago, it was at $85,109, and then currently it's at $95,000. So it's definitely up $10,000, but let's go even further than that, right? Let's take a look at let's go to the year marker, right? So over the last year, I'm up $22,000, and this is also me pulling out about, how would you say, like $34,000 to pay back my HELOC loan. So everything has been going higher, but this isn't the highest my account's ever been. The highest this account has ever been is $113,000, and currently because of December, trending a little bit downwards, I was heavily invested into Nvidia, and it took like a downward dip. Right, market conditions, new presidency. Everyone's trying to navigate how to kind of roll with, the Trump administration. Is it going to be a good thing? Is it going to be a bad thing? So the market is showing exactly that. It's kind of just in limbo. It's not going up too high. It's not going down too much. It's just kind of staying very stagnant because we really don't know what the next move is going to be. Right, but so far the project is going on for coming up on 9 months, and it's going pretty good if you were to ask me. But let's talk about the positions I'm holding. So let's zoom in onto the actual individual holdings, and I'm going to talk about them. All right, now we're talking about the individual holdings. So about a week ago, I bought a leaps on Nvidia. So basically, I bought a option that's 2 years out of the money at the 135 strike price. I saw Nvidia drop down to about 122 a share, and I'm like, man, I still think Nvidia is like a great stock. I think it still has a very bull momentum, and I think the earnings that's coming up on February 27th is going to trend it higher in the up direction. Yeah, the DeepSeek came out, kind of like rattled the market, which kind of means that the market might be a little too overpriced. However, because like Nvidia has an amazing product, and we're getting reports that DeepSeek actually were purchasing the Nvidia H100 chips from the side off of like a secondary source, I definitely think the hardware is still more important than the software. Everyone's come out with great software, but guess what? You still need the hardware for the AI to be successful. And so in that case, right, I saw Nvidia drop to 122 share. I have a very bull case that I think it's going to go back up to this normal trading range of like somewhere between 135 and 145. On the low end, I set the call at 135. And currently, we're going to take a look at how this has performed thus far. If you look at the position, the total return, I'm up $373, and it's been a week, right? I'm up 10%. So that's pretty great. I think in the next week and the weeks leading up until February 27th, the earnings is going to continue pressing higher and higher. But I think I'm going to cash out once I get about $600 in net profit. For me, I'm not necessarily looking for a home run to change my life. I'm just trying to do a bunch of small little moves that are very safe, and I want to make sure I don't lose any of my money. Cool. Now going back, I'm going to talk about my overview high income ETFs. Right. So for my round hill holders, I have rdte and xdte. So for me, the way I look at these is they're my consistent weekly payers that don't have as much NAV erosion as compared to yieldmax. Some people say there is NAV erosion for these funds. Some people say they don't. I think there currently is, because if you look at the chart, right, over the last year, there's this big significant dip, and it hasn't recovered from the dips, right? Because we had these dips in July where it went down to, $49 a share. Same thing here, another big dip, but they usually came back. Here, the last trading since, I would say, December into January into February, the xdte hasn't recovered from the dip. So therefore, I definitely think this is NAV erosion, and it's not coming back up, right? If it were to come back up and trade back at this $52, $53 mark, we have a consideration where, yes, maybe NAV erosion doesn't exist for this fund. However, because it hasn't shot back up and the S&P 500 has gone back up, there is a case to be made that there is NAV erosion for these funds. So that's just kind of my 2 cents there. Let's take a look. I'm not going to go into rdte, but for both of them, there is NAV erosion. If you were to ask me, is it as much as yieldmax? No, but it's there, right? But kind of like my retire on videos, as long as you're putting back in the amount of NAV erosion, that anything you take after that NAV erosion is profit. But right now, anything that's under my cost basis, I'm reinvesting all of it. And my cost basis is pretty high, right? If you looked at xdte, I think it was like 52 something. So it's the xdte is trading at $50.35. So anything below that 52 mark, it's getting reinvested. So let's take a look at ymax and ymag. These two funds definitely have more NAV erosion than my round hill funds, but the reason why I like to keep the yieldmax funds in here is the premium is pretty great compared to how much money invested. So for this week, you're going to see that for ymax, I only have a $20,000 investment in ymax, but it had the same weekly premium as xdte. So there's something to think about there. And same thing as the round hill funds, I'm reinvesting anything that's below my cost basis. JEPQ and gpix, these are more so my long-term holdings where, yeah, I'm not going to get as much premium, but I'm keeping them into this fund so that the account doesn't fluctuate in value too much, because I am borrowing a lot of money on margin. So there's some parts of my account where I don't want to borrow too much or be invested into high volatility type of income ETFs. The income for JEPQ and gpix isn't as much. For a month period, I only made $150 between $150 per fund with a $20,000 investment. Not great by any means. However, the fund doesn't fluctuate too much, and then it allows me to, stack more money in other high income ETFs and make more money in that regard. So this is more kind of like my foundation. Same thing with amzy. Oh, didn't want to click it. But same thing with amzp and goop. The curve funds do a better job of NAV erosion than the yieldmax funds. I'm definitely even on the fence of getting rid of my ymax, but I kind of want to give the funds a little bit of time, because if you do the math and you reinvest every single dividend, eventually you're going to get to a point where the distribution is high enough where you're not going to have to be reinvesting the whole premium back into it to maintain your initial investment. So I kind of want to see if that's going to be a reality. So I kind of gave myself a 1 year period with these ymax funds to just kind of continue forward, right? There's going to be fluctuations. There is going to be a little bit of a downward trend. But if it's anything more than like 10% or 15% down, we might have to have a hard look and then just reinvest into curve funds. But yeah, amzp goop maintain the NAV a lot better than yieldmax, and they pay a decently high distribution. So I love curve funds. I have about $60,000 invested in curve, $40,000 in ymax or yieldmax plus Nvidia. So that's, I think, like 70,000. So I have about 70,000 in yieldmax, 60,000 in curve, 120,000 in round hill. Also wanted to talk about Nvidia real quick. Nvidia is one of the funds I've had the longest amount of time. I think since I've started this project, I've always owned Nvidia, which was back in June of 2024, right? The reason why I like to keep about 1,500 shares of Nvidia, that's usually what pays my HELOC loan payments back. My HELOC loan payments is about $796 per month. And Nvidia payments usually somewhere between, $1,000 to $1,500 a month. And that's plenty to cover that payment. That's why I like to keep it around. Cool. But now let's go over to the charts. All right, guys. So for this part of the charts, I'm going to take myself off the screen so we have more room to view the numbers. So let's begin. So for the weekly distributions for the 6th week of 2025, I made a premium of $1,358.35. Pretty average if you were to ask me, right? That's kind of like on the lower end. Usually 3 of the 4 weeks is in the 2000s, but the first month, or for the first week of the month, is usually kind of lower if you look at the historicals. Cool. Let's take a look at my account total. The highest my account has ever been was about $266,386. Right now, we're a little bit below that threshold. We're about $5,000 down. Right. So currently, for the 6th week of 2025, my account is valued at $261,276.36. Right. So we're going back to my Robinhood account. As you saw on my screen, it showed that I had $95,000 invested. So if I sold out of every single one of my funds today, I would have a net of $95,000. This $261,000. That's just also my margin investments as well. So I like to track that as well. Cool. So for xdte, what's in the parentheses here is 58,750. So that's the investment I made into xdte, right? And if we look at the February 7 numbers, the account is at $59,971.25. So technically, since investing, even though my cost basis, even though the fund is trading at $50 a share, I'm still technically up on the investment about almost $1,000 because I've been continuing to reinvest the money. Cool. Moving down to the xdte premium. So remember this number, $212.48. I'm invested almost $60,000 into xdte. And then when we look at ymax, I'm only invested $20,000, but the premium was exactly or similar or better. So we'll just kind of point that out once it gets there. So moving over to rdte, I invested about $59,295, right? And if you look at the current account value, why do I keep double clicking? It is at $58,441.89. So I'm definitely down a little bit. So I'm down $600, almost $800 in the small caps, but I like owning some rdte to distribute my exposure into the market, some into the S&P 500, some into small caps. That's why I'm kind of sticking with rdte for now. All right, moving forward to the rdte premium. However, even though rdte is having a little bit more NAV erosion than xdte, I do like the distribution payment. The distribution payment for February 7th was $403.44. I like this a lot. I like big numbers. Cool. Now we're going over ymax. So in the parentheses, my investment into ymax was $18,882.40. Currently, ymax is trading at that $18,281.99 mark. So we are down a little bit. We're down about $600. However, I'm still going to give it some time to progress upwards or progress downwards and just give it room to breathe a bit. So no changes are going to happen this week at least. Now let's look at the ymax premium. As I mentioned, the ymax premium is $215.91, right? That was higher than the xdte payment, and it was a smaller initial investment of $18,000 versus $60,000. Moving over to ymag, I invested, we'll just round up, say $20,000. Why these numbers look really ugly. Cool. So I invested that $20,000. So I definitely am down about $1,000 in ymag. And the current value for my ymag investment is $18,960.21. Let's scroll down to the ymag premium. The ymag premium was about $195.70. Right. And it definitely has been the highest since buying it back in January. So that's definitely good to see there. Looking at the amzy valuation, amzp, I had a $40,000 investment. And if you look at the numbers right now, amzp is, for my account, is at $41,076.89. It's up $1,000. That's exactly what I want in a high income ETF. NAV appreciation and a high distribution. amzp is definitely high on my list. I'm even considering buying more. Cool. For the MSP premium, we have nothing because it is not when it pays. So we're going to move past that. Now let's go to the Goop valuation. So I had a $20,000 investment into Goop, and currently, as it stands, I am still technically up about $329 in my investment, but it has been going downwards a little bit. So about a week ago, Goop was at $21,848, and now it's at $20,325. I don't like seeing a downward momentum. However, I think this is temporary. Eventually, Goop will get back on track and continue pressing forward with a higher distribution and a higher account value. All right, for the Goop premium, there was no premium for Goop, so we're going to scroll past that. Let's talk about Nvidia, right? So for Nvidia, my initial investment was about $33,884.55. Currently, Goop is trading at $30,300. And it is it's down about $3,500, but Nvidia is down. I definitely think Nvidia is going to go up a little bit. And with that upward momentum, I think this account will recover. No premium for Nvidia in the last week. And let's go over to gpix. So for gpix, I had an initial investment of $22,100. Currently, looks like we're down about, $42 because it's my current value for gpix is $22,058.03. Let's take a look at the gpix premium. So owning about $20,000 of gpix is going to give you a premium of $157.94, right? This is definitely a pretty low distribution, and looking at this, I do like this as my core foundational holding. However, it might make more sense to put this into one of the curve funds, but I definitely just kind of want to minimize my risk. Instead of being into one specific fund, I kind of want to spread it out. That's why, even though the distribution isn't as high, the market fluctuations in value isn't as much. So I like having that little bit of stability. Same thing with JEPQ. So JEPQ, I had about $21,915.48 investment. We look at the numbers right now. It's currently valued at $22,157.10. So it's definitely up a little bit, you know, $200, $300. So that's definitely great. And let's take a look at the distribution it had for February. So for February, JEPQ paid out $172.88 for about a $22,000 investment. Same thing as gpix. Doesn't fluctuate too much. Distribution is there. I kind of want to minimize my one fund manager risk. So that's kind of where my head is at. All right, guys, that was just a quick down and dirty video of the numbers for the 6th week of 2025. Hope you guys enjoyed the video. I was hoping that you guys give me some likes, comments, subscribes. I read every single comment. Enjoy your journeys out there, guys. Have fun. Matt out.